Gordon Gekko is back.
Life is fine, especially with a hot new hedge fund.
Are you kidding? The economy's terrible. But you know what? Send me the details.
I once said greed is good. Now it seems it's legal.
Did the movie Wall Street cause the 2008 financial crisis? Now, in this reaction video, I'll break down and explain the financial concepts in the movie called Money Never Sleeps, which is a sequel to Wall Street. Based on my work experience at Goldman Sachs in New York City and at the top hedge funds in the world, I'll also teach you many real finance topics that can help you when you invest. Now stick around because at the end of this video, I will grade the movie for Wall Street Realism with a buy, hold, or sell rating. Let's begin.
Are we going under?
Harry, you gave me your word. You know I know.
You okay, Lou?
Who are you to talk about moral hazard?
I'm sorry, Lou.
Now, in the movie, Lou, who runs a firm similar to Lehman Brothers in 2008, knows his firm is about to go under, so he unalives himself. Now, I worked at a very large hedge fund, and somebody in our office did the same thing. Now, I say the following with love in my heart. If you or someone you know is struggling, you're not alone. Please know that help is available right now. Please go to this website you see here to be connected with the Suicide and Crisis Lifeline. For those outside the United States, please search for this right here. Thank you. Now, I know many good people that work for hedge funds, and some are very depressed because they compare themselves to those that make more, and they're never happy. Bud Fox and Gekko represent this from the prequel.
Tell me, Gordon, when does it all end, huh? How many yachts can you water ski behind? How much is enough?
It's not a question of enough, pal. It's a zero-sum game. Somebody wins, somebody loses.
Now, at bonus season on Wall Street, so many people are depressed because somebody made more than them. And the only reason you should look in your neighbor's bowl is to see if they have enough to eat and not to see if they have more than you. Read this book, please. The Dalai Lama said the problem with Western society, meaning Wall Street, is we sacrifice our health our entire lives to make money. Then at the end of our lives, we sacrifice all of our wealth to maintain our health. Then we look back and we realize we never really lived to begin with. If you can, please live below your means. Let's get back to the movie. Jake here will become Gordon Gekko's son-in-law, and he works at Keller Zabel, which is similar to Lehman Brothers.
Keller Zabel's loss today was the worst in over a year, and this big drop may be just the beginning of a much deeper correction. It is an amazing story. Keller Zabel's stock is getting hammered.
Now, whenever you see a trading floor like this on television, it often represents the sell side, which is an investment bank like Goldman Sachs or Morgan Stanley or Lehman, which went belly up in 2008. Now, on the trading floor are traders, other employees, and salespeople who call their clients to get them to transact or buy stocks. Now, an investment bank is a sell-side firm because they're on the phone selling to the buy side, meaning hedge funds and mutual funds that buy stocks or transact. And the sell-side firm gets a commission. And these trading floors are not really that profitable. They're not the main profit driver for investment banks. The main profit driver for investment banks is investment banking. Okay, and investment bankers don't sit on the trading floor. And what investment bankers do is they underwrite IPOs like the Facebook IPO here, for example, and the trading floor is merely a distribution channel to sell the IPO.
On a 50% margin, buddy, I can still get you out now at a total loss, but at least you won't know.
Now, please don't use margin, as many hedge funds go bankrupt because of this. Now, 50% margin means you borrowed 50% of the money to invest. And this is deadly, and you can lose it all in the following example. So let's say that you invest $1,000 in one stock. You put down 50%, meaning 500 bucks, and you borrow, meaning you get margin for the other 500 bucks. Now, if the stock goes down by 50%, meaning the value of the stock goes from 1,000 bucks to 500 bucks, then you still owe the 500 bucks, so you lost your initial $500 investment. Now, in the fall of 2008, many hedge funds used 10 times leverage, meaning for every $1 in cash they had, they invested 10 bucks. So in that case, let's say you use 10 times leverage, meaning you invested 100 bucks and you borrowed 900 bucks. Now, if the $1,000 invested in the stock goes down by 50%, you're down 500 bucks minus your investment of 100 bucks, which means you owe $400, which is 4 times your $100 investment. Now, this movie was set in 2008 when we were within 24 hours of bank machines not working.
Are we going under?
You're asking the wrong question, Jacob.
What's the right question?
Who isn't?
In one incredible week, shares of KZI are down 52%.
Now, KZI, Keller, is like Lehman Brothers. Now, in 2008, Lehman Brothers was using over 30 times leverage. And Lehman was trading with Goldman, Morgan Stanley, and other top firms. And when Lehman Brothers went under, all other banks would have also gone under if the government did not rescue the other banks. Now, this dude in the movie here looks like the 2008 Treasury Secretary and former CEO Hank Paulson of Goldman Sachs, who has always hated Lehman Brothers. And in this meeting, he is meeting with the heads of the investment banks.
Valuations are no longer believable. After all these years, you say this to me?
3/4 of the banking houses at this table are holding the same paper, and you're gonna let Keller Zabel fail?
So this is an accurate depiction of what actually happened in the fall of 2008. Hank Paulson let Lehman go under, which almost pushed us into another Great Depression. Now, before letting Lehman Brothers, meaning Keller Zabel in this movie, go under, Paulson tried to get the other investment banks to bail Lehman Brothers out.
What do you say, Harry? Will you come in on this?
Look, if you want us to bail out Keller Zabel, all of us will have to participate, like long-term capital in '98, and we will need substantial guarantees from the U.S. Treasury.
Now, LTCM, meaning long-term capital management, was a hedge fund in the 1990s that used 25 to 100 times leverage that went belly up. And the government had to partner with large investment banks like Goldman Sachs to bail out LTCM, or a global recession would have occurred and investment banks might have gone belly up. And the smartest finance people on the planet ran LTCM, meaning long-term capital management, including Nobel Prize winners like Myron Scholes, who created options valuation metric Black-Scholes. And so read this book here, please. It's called When Genius Failed, for more details. Now, the lesson here is that you should never rely on anybody, including me, to tell you what to invest in. Always do your own research. Now, in the movie, Bretton James, who plays a mean version of Jamie Dimon from JP Morgan, questions why should they bail out Lehman, meaning Keller?
We bail out Keller Zabel. Who's to say it's not going to happen again and again?
You vindictive bastard. Who are you to talk about moral hazard?
Now, moral hazard means banks take huge risks and they don't give a damn if they lose money because the government, for example, will bail them out, which is totally unfair because many Americans lost their houses in the 2008 crisis. Yet these bankers that were bailed out by the government, these bankers paid themselves record bonuses in 2010. And Gordon Gekko explains moral hazard here to director Oliver Stone's mother.
Moral hazard is when somebody takes your money and is not responsible for it.
And portfolio managers that work at hedge funds, if they're down a lot on a year and they think they might get fired, then they sometimes swing for the fences and take on much more risk, which is what happened in the second half of 2008. Now, if you want to up-level your career or your investing results, please click the link at the top of the description of this video to set up a call with me. Thanks. Now, halfway through the movie, Gordon Gekko makes this epic speech at Fordham University.
You're all pretty much you don't know it yet, but you're the ninja generation. No income, no job, no assets. You got a lot to look forward to.
Now, this generation, rightly so, hated the government bailout in 2008. And the stimulus program, they actually called the Steal From Us program. I don't blame them. Now, Gekko's mention of ninja also references the infamous ninja loans, which is a type of subprime mortgage given to unqualified borrowers. And ninja loans references the lending standards that led to the housing bubble in 2008. And things were so cray-cray that in 2006, roughly 50% of subprime loans issued required little or no documentation of income or even assets. And more than 1 in 5 subprime mortgages from 2006 were in default within just a couple of years. And firms like Lehman Brothers invested in mortgage-backed securities stuffed with these subprime loans, and they lost 70 to 80% of their value when the housing market collapsed. And Lehman owned about $85 billion in these mortgage-backed securities. And remember that Lehman had over 30 times leverage exposure. And these ninja loans were a major driver of the 10 million plus US foreclosures that occurred during and after the 2008 crash.
I once said, greed is good. Now it seems it's legal. And it's greed that makes the government in this country cut the interest rates to 1% after 9/11. So we could all go shopping again.
That's not accurate. Rates were not cut to 1% after 9/11 per this chart here. but they were cut to 1% by mid-2003. Now, when it comes to monetary policy, meaning the policy of money, the government cuts interest rates to stimulate the economy. Now, how do they do this? Well, let's pretend that I'm the Federal Reserve and you're all large investment banks. I, the Federal Reserve, buy these bonds from you, okay? And in return, you get money. Now that the banks have a larger supply of money, they lend this out to consumers and companies. Now, since there is more money out there, meaning the supply goes up, then the price or the cost of money, meaning interest rates, go down. The problem is, when you can't cut rates when they are basically 0%, which is what we saw in 2008 here, and also in Q1 of 2020 during the COVID crisis. And this can create a bubble because nobody keeps their money in the bank when rates are basically zero. For example, in Q1 of 2020, when rates were 0%, all other asset classes started to rally, including speculative NFTs, baseball cards, and comic books as well. And bubbles are nothing new, as Gekko explains here in his New York City apartment with the Tulips bubble.
This is the greatest bubble story of all time. Back in the 1600s, the Dutch, they get speculation fever to the point that you could buy a beautiful house on a canal in Amsterdam for the price of one bulb.
And human nature is the same with all bubbles, as eventually this happens.
They called it tulip mania. Then it collapsed. You buy 10 bulbs for $2. People got wiped out.
Now, when do you short a bubble if everybody knows we're in one? Well, back in 2006 and 2007, I worked for a hedge fund called Pequod, founded by the late great Art Sandberg. And we pitched housing shorts to him in July of 2006. I remember this, like KBH and Lennar, ticker LEN. And our thesis was that we are in a housing bubble. And he very kindly interrupted our short thesis and said, "Son, I've been around long enough to learn that you never stand in the way of insanity because markets peak and markets trough, but you can never time it." And I remember being frustrated about not being able to put on the position. But the problem is many hedge funds are too short-term focused. Like Michael Burry in The Big Short, there is nothing wrong with being a bit early. Let's get back to Gekko's speech in 2008 before the crash.
They got all these fancy names for trillions of dollars of credit. CMOs, CDOs, SIVs, ABSs. You know, I honestly think there's maybe only 75 people in the world who know what they are.
He's right. Hardly anybody understood what was in these complex mortgage-backed securities. And if you ever can't understand a security, like an insurance product, for example, then it means there could be insanely high hidden fees. Don't buy them. And when I worked in the hedge fund industry, my boss would always say, if you can't explain it, then you don't understand it.
But I'll tell you what they are. They're WMDs, weapons of mass destruction.
He's totally right. Warren Buffett referred to complex derivatives as financial weapons of mass destruction. Now, why did the investment banks like Lehman start to invest in these mortgage-related securities? It wasn't just about greed.
Greed got greedier with a little bit of envy mixed in. Hedge funders were walking home with 50, 100 million bucks a year.
And the bankers were envious of the hedge fund bonuses. Now, the way that compensation works for a hedge fund is they often charge 2 and 20. And what this means is they charge a 2% annual management fee in order to pay for salaries and other expenses like rent. But the big money is in the 20% incentive fee. For example, if a hedge fund has $1 billion in assets under management and they're up 100%, then of the $1 billion that they made, they keep 20% of this, meaning $200 million. And the owner of the hedge fund often gives half that amount to the portfolio manager or managers that made the money, which is way more than what the banks actually made.
So Mr. Banker, he looks around and he says, my life looks pretty boring. So he starts leveraging his interests up to 40, 50 to 1 with your money, not his.
This is accurate. And at one point in 2008, Lehman's use of leverage was way more than 30 times. So if Lehman's portfolio went down just a little bit, then they go bankrupt. Investors in the banks had it so good that they didn't care about the risks.
Last year, ladies and gentlemen, 40% of all American corporate profits came from financial services. We take a buck, we shoot it full of steroids, and we call it leverage.
And the system was rigged because the ratings agencies like S&P did not downgrade these crappy mortgage-based investments. because they knew if they did this, then other rating agencies like Moody's would get their ratings business instead of S&P. And as Hank Paulson in the movie Too Big to Fail said, nobody cared, as they were making too much money.
The mother of all evil is speculation, leveraged debt. And I hate to tell you this, but it's a bankrupt business model. It won't work.
Accurate. If you speculate and you don't do your own due diligence, meaning your own investment research, and if you use leverage, then this is a recipe for disaster with stocks, bonds, a mortgage, etc. if you put down well under 20%. And Warren Buffett said the two most important rules of investing are number 1, don't lose money, and number 2, don't forget rule number 1. With speculation and leverage, you will violate these rules for sure. Now, what does Gordon Gekko think about money?
Money's a bitch that never sleeps. And she's jealous. And if you don't pay close attention, you wake up in the morning, she might be gone forever.
Brutal quote, but this comes back to Buffett's capital preservation quote of the primary purpose of investing is not to lose money. You'll be happier and you'll live much longer if you live below your means, unlike people on Wall Street that spend all their money on rent and partying. And Daryl Hannah had a great quote about money from the prequel to this movie.
You may find out one day that when you've had money and lost it, it's much worse than never having had it at all.
Oh, yeah? That is bullshit!
She's right, though. And please read these books right here on how to live below your means. You've got The Wealthy Barber and The Millionaire Next Door. And as Warren Buffett said, spend what is left after saving instead of saving what is left after spending. Let's get back to Gekko.
The one thing I learned in jail is that money is not the prime asset in life. Time is.
Those are wise words from a crook. Live for today. So many people on Wall Street work their asses off so they can enjoy the last 10 years of their life. Live below your means, and you can live for today and smell the roses along the way as well. So the market is about to crash in 2008. How is Gekko going to profit from this?
You know, there's fortunes to be made. Hundreds of millions of dollars betting against this bubble. Just wish I had $1 million.
So how do you bet against a bubble like what we saw in 2008? Well, there's a couple of ways. One way is some hedge fund investors like Michael Burry in the movie The Big Short noticed that too many risky home loans, meaning subprime mortgages, were being made. So he wanted to bet against collections of mortgages, okay? And those are called CDOs, okay? And a CDO stands for collateralized debt obligation. And this is a bundle of crappy subprime debt packaged together into one product that investors can buy. Now, recall that subprime debt means risky home loans to borrowers with very weak credit. So what Michael Burry did was he asked firms like Goldman Sachs to create insurance bets that he could buy that would go up if these CDOs went down. And the insurance bets, they're called credit default swaps, or CDSs. And Burry bought them. So when this CDO here went down, these CDS contracts skyrocketed in value. And investors like Michael Burry made a fortune as the credit default swaps went up big time. Another way to make money is to short a stock like Lehman Brothers here. So how does shorting work? Well, let's say that one share of Lehman Brothers is worth $100, and I want to make money from it going down. So I borrow a share of Lehman Brothers from an investment bank like Goldman Sachs or Morgan Stanley. Now, I promise to return this share back to Goldman, for example, at a price of $100. Now, while I have this share in my possession, I lend it to somebody else. Somebody else buys it from me. So they buy it from me for, say, $100. Okay, they bought it, I get $100. Thank you. Then Lehman goes down to $1. Let's say it crashes, okay? And then I buy it back from this person for $1. And that's awesome because I just made $99. Now what I do is I return this share to Goldman Sachs and maybe I pay a 1% borrow fee. So I just made $98. What would happen if I sold the share to somebody for $100 and Lehman's stock price went up to $150? Then I have to buy it back for $150. So I just lost $50 plus the $1 borrow fee when I return the shares to Goldman Sachs. That's why it's called stock loan business. Now, shorting is deadly and exposes you to an unlimited amount of loss, as a stock can go up a lot. In fact, this is crazy. In January of 2021, GameStop, ticker GME, went up about 30 times in 1 month, and it caused hedge funds to lose a fortune, and some of them went under as well. So a safer way to bet against a stock is to buy puts, as your losses are limited. Let me explain this. A put is like an insurance contract. I have life insurance and I pay a small amount of money every month, and I'm worth more dead than alive. It's true. Now, if I lose, I lose the small insurance amount I pay monthly. If I die, my family gets a ton of money. And a put is very similar to that. So what I would do, instead of shorting Lehman, okay, I would buy a put, if I can find it, it's liquid enough. I would buy a put for this much money on Lehman Brothers. If the stock goes down, I make a lot of money. If the stock goes up, all I lose is what I paid for the put right here. Let's get back to the movie. Gekko and his soon-to-be son-in-law, Jake, they both hate this dude, Bretton James, as Gekko went to jail because of Bretton, and Bretton made a fortune shorting the Lehman Brothers company, Keller-Zabel, through an offshore fund.
There were some large shorts for money out of the Cayman Islands, something called Locust Fund.
Locust Fund?
These guys made some serious money.
Who is that, though? Who is the Locust Fund?
So it turns out that Bretton James from Churchill Schwartz was involved in this hedge fund called Locust Fund. Now, Locust Fund is pretend, but it's located in the Cayman Islands. And a lot of hedge funds locate offshore, so their international clients don't pay US taxes, and for secrecy, as it's harder to track who offshore investors are. So how is Jake going to get revenge on Bretton James, who indirectly caused Jake's boss to die?
Churchill Schwartz has a huge position in this thing. I want to get short that stock.
Churchill Schwartz is behind that?
It's just a rumor. You might take a hit. About that African deal?
Yeah, I heard they're going to nationalize.
Churchill Schwartz!
So what happened was Jake broke the law by spreading a rumor that an African oil company that Bretton James' firm Churchill Schwartz owned was going to be nationalized, which could make Churchill lose a fortune. And this damage caused Churchill Schwartz to lose $120 million. Now, stock market manipulation is against the law, meaning spreading rumors. So how did Bretton react to Jake's actions?
You got my attention, Mr. Moore. Come work for me. Where we're a little light is in alternative energy.
So Bretton, who is Thanos, is dressed in red like Satan. And the painting behind him is fitting, as it's Saturn devouring his young, which is a theme in this movie as Gekko steals from his daughter and blames Gekko for her brother's overdose. Now, as we see here, art played a huge part in the prequel, and billionaires on Wall Street love to show off their art. And I once worked for a billionaire, and the art in my office was worth way more than my net worth. Now, it's a smart investment, as the supply is literally one, if it's an original, and demand rises a lot over time. And smart investors like to invest in assets where the price increases but supply does not increase, hence why I'm a bull on gold in the long run, ticker GLD. Do your own research. Although, in San Francisco Bay Area, where I live, many billionaires who are cheap don't put art on the walls at their offices anymore, as the left coast here taxes it as part of property tax. Art is taxed as property tax. How crazy is that? Unlike in New York City. Now, how much money do these Wall Street masters of the universe think is enough?
What's your number? The amount of money you would need to just walk away from and live. See, I find that everybody has a number, and it's usually an exact number. So what is yours?
More.
Now, just like Gekko said, it's not a question of enough is enough, as it's a zero-sum game. And this is why some billionaires who are already loaded break the law. They can never have enough. And don't think for a second that they're happier than we are. It's sinful to make money your God. Separately, where does Gekko prefer to hide his money?
What would you do with your money?
Me? Switzerland, still the best. Got a healthy distrust for a big government.
Is that where you keep it?
I did.
So that scene was based in 2008. But in 2009, Switzerland agreed to loosen its strict banking secrecy laws. And by 2010, the US government requires Swiss banks to report US account holders to the IRS. There's nowhere to hide. So what does Jake want to invest in?
This company could change not just the energy market, Gordon, but the world.
Oh, idealism. Idealism, pal. It kills every deal.
Gekko's comment is harsh, but somewhat true. Companies need to stand on their own 2 feet and can't just exist because of government subsidies. Now, in 2008, many alternative energy companies were the worst investments because they only existed because of government subsidies. For example, the solar market was massive in Spain then, And the Spanish government cut subsidies as they had debt issues, which killed the solar and clean tech market then. Plus, these investments can be very capex intensive, and separately, at one point in 2008, oil was at $150 a barrel. Now, Wall Street is in free fall. So the Treasury Secretary, who looks like Hank Paulson, who was the Treasury Secretary head in 2008, calls an emergency meeting of all the top investment bank CEOs, and here's what Bretton had to say.
If we don't stop the bleeding, in 3 days, half the banks in this room are out of business. In 5 days, we're all gone.
You men realize what you've done here? You are asking for the biggest bailout in the history of this country.
Accurate. In the fall of 2008, we were within 24 hours of bank machines not working, and Paulson made the mistake of letting Lehman, meaning Keller in this movie, go belly up. If there's no government bailout of the banks, what could happen?
1929. It'll get worse now because it'll go faster. Money markets will dry up around the world by the end of the week. Mobs panic. It's going to be the end of the world.
Now, we were on the brink of disaster in 2008, and Warren Buffett actually made a cameo appearance in this movie.
It's an economic Pearl Harbor. We got to figure out some way to put the fire out, and that means government.
And Buffett was the voice of reason as always during the 2008 crash. And he encouraged investors not to panic following the collapse of Lehman Brothers. And he advocated focusing on the long-term potential of strong companies. And he reminded us all to be greedy only when others are fearful. This is why we have to be long-term investors. And when Buffett buys a stock, he assumes that the market's going to be closed for 10 years after he buys it. Now, think of all the times we panicked when a stock went down and we're kicking ourselves for selling it. And Buffett also said, this one's good, that the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Now, in the movie, Gekko moves to London with his $100 million that he stole from his daughter's trust, and he opens a hedge fund where he plans to make a killing betting against the U.S. markets.
What do you feel about California municipals, Gordon?
No way. Right now, it is ugly times ugly. And that's when the ugly get going. Gordon Gekko is back.
Now, Gekko's hedge fund is in London and not in the United States because he got in trouble with the SEC, similar to Bobby Axelrod in the TV show Billions. So they both manage money now in London because the SEC cannot enforce outside its borders unless US investors are solicited. And London historically has looser hedge fund laws, and hedge funds are inherently international. So you don't really need the US retail investor base to thrive. Now, Gekko is back and he's preparing for battle.
Most people, when they lose, they whine and quit. So you got to be there for the turns. Everybody's got good luck, everybody's got bad luck. Don't run when you lose. Don't whine when it hurts. Nobody likes a crybaby. I'll take 4 of these.
Now, the most successful investors and hedge fund billionaires that I've worked for are incredibly unemotional. They don't freak out when they see volatility and the market is crashing. And they don't over-celebrate with wins. Always be unemotional in business. So how successful was Gekko with his $100 million hedge fund?
Turning $100 million into $1.1 billion in this market takes some brains, right? My guys are good. It's no wonder our new fund is oversubscribed.
Now, Gekko's returns betting against the market in 2008 were likely much better than Michael Burry's returns with his hedge fund called Scion Capital, as shown in the movie The Big Short. And Gekko mentioned that his new fund is oversubscribed, which is Wall Street talk for, hey investors, this is a hot deal, you have to participate. And with IPOs, a lot of investors gauge whether they should invest or not based on the fact that a deal is oversubscribed. Now, you can't always get this data, but Figma's 2025 IPO was well over 30 times oversubscribed. Now, towards the end of the movie, we see Gekko's portfolio right here. We see he has $1.4 billion of long exposure and about 300 of short exposure for a total of 1.7 in gross exposure. Now, assuming he has 1.1 billion in assets under management and $1.7 billion of gross exposure, then this means he's using $600 million of leverage. Now, how do you calculate his leverage? Well, you take $1.7 billion in gross capital invested, divided by 1.1 billion in assets under management minus 1. And this means he is using about 55% in leverage. Now, what is his net exposure? Well, we calculate this by taking his long exposure, of $1.4 billion minus his short exposure of about $300 for a net exposure to the market of about $1.1 billion. So he's pretty long the market at this point. And let's hope for his sake that this portfolio was after the 2008 sell-off and near the bottom when the S&P 500 was at about 666 in early March of 2009. Let's talk about Donald Trump in this movie, which was actually a deleted scene.
It's a great place to get a haircut.
I love this place. Been coming here since the 80s.
Well, the 80s are no longer, Gordo.
So director Oliver Stone cut this scene because he said it was distracting. And Trump had 2 pages of prerequisites that included the following. The preferred camera angle is Mr. Trump sitting front face to camera slightly favoring his right side while avoiding his left hair part. And when he is facing the camera has to be at eye level. And when you're doing a Zoom meeting, to be in a position of power or a position of confidence, try to be at eye level when looking into the camera and try to fill up the whole frame and leave about 2 fingers of room between the top of the frame and the top of your head. Okay, optics really matter, and you never get a second chance to make a first impression with a Zoom interview, of course. Now, did the original movie Wall Street cause the great financial crisis of 2008? I believe it did in part. In the behind-the-scenes commentary of both Wall Street movies, Michael Douglas says he feels uncomfortable with how many people on Wall Street come up to him, thanking him for playing Gordon Gekko in the prequel, as they only work on Wall Street because of him in that movie, this movie here. And so the greed mentality of the 1980s, as shown by Gekko in the first Wall Street movie from an anti-hero perspective, really influenced many people to put greed ahead of ethics, especially when it comes to moral hazard, which led to many unethical people joining the financial services industry. Now, of course, most people on Wall Street are not unethical, but it doesn't take many rotten apples to destroy the whole darn bunch, which is what took place in 2008 when the 80s influenced greed came to a crescendo. And it breaks my heart that the government bailed out the banks in 2008 and the bankers gave themselves record bonuses in 2010. Meanwhile, more than 10 million Americans lost their houses. That's not fair. Let's talk about grading of this movie for Wall Street realism with a buy, hold, or sell rating. The movie did a great job of showing how close to economic chaos we were in 2008 by portraying this Hank Paulson lookalike as Treasury Secretary and Keller as a proxy for Lehman Brothers. However, there were some inaccuracies, like Gekko's mention of a Fed rate cut to 0% after 9/11, which was not accurate. As a result, I'm going to give this movie a hold rating. Please like, comment, and subscribe, and I will see you in my next reaction video when I react to finance topics from the first season of the TV show Suits. Thank you.